So let's take a listen to Barry Sternlicht. He was on Squawk Box earlier talking, of course, about their latest Jaws Spitfire SPAC. We talked about it yesterday. Didn't do too much, but Mr. Sternlicht had some interesting things to say about the due diligence process for SPACs that are looking for deals and how competitive it's become.
You can't compete against stupidity. We lost several companies the weeks before. One in particular where we wanted to do 60 days due diligence, and the competitor said they do 3 days due diligence. I'm like, I can't compete against that. I'm not going to do that. It's a little out of control. No, it's a lot out of control. Don't expect Wall Street to regulate the launch of SPACs. They're making too much money, and if you can walk, you can do a SPAC. Most of these companies have been theoretical companies. They make no money today, and hopefully in 5 years they're making $8 billion.
This is a guy who's done, what, I think 6 of them, Jim. But, Sternlicht always gives you a great quote. He's obviously talking about the SPACs that have gone public, that are looking for deals, competing for transactions, how he wanted to take more time, obviously, for due diligence, and what may be a lacking process of due diligence for certain SPAC sponsors. But, Jim, I also want to take a look at, as we take a look at the CNBC SPAC 50, there is now piling up a bunch of SPACs that have filed to go public, but have not yet done so. And that window is closing because you've got 10 trading below $10 a share.
Right.
Again, they've gone public, but they haven't yet announced their deal, remember. 289 SPAC IPOs, raising $93 billion, looking for deals. And then you've got a bunch that have filed, Jim, that have yet to go public. And that's where I think we need to focus, because you're not going to see 10, 12 price in a day. That is over, because these things are not moving up anymore at all. In fact, some of them are actually trading below 10 right away.
Well, Barry, that was a great interview. Barry went on and on with some really interesting stuff, talking about the customers are going to be exerting the discipline. I really urge people, if they can, I don't know if they can get a copy of the interview, but one of the things the point that he made, David, is that they're good and bad. And yes. I follow Barry really closely. When Starwood Property Trust was down big, what did he do? He came on Mad Money. And he said, not to worry, things are fine. It was exactly right. The stock took off. I think that you and I both know he's a rigorous person. He does a lot of due diligence. He's just not putting his name on anything. At the same time, he really did savage. He savaged what I call the industry. And he even said there are bucket shops that are doing deals. And he did indicate that this is got to end soon. Yeah. I think that there are good and bad ones.
As there always will be. And you're right. Listen, I don't believe, based on numerous conversations with so many different players in this market, it's not going to disappear, Jim. It's going to be with us. We'll be talking about SPACs. It will always represent a new or different way to go public for many companies, particularly ones that may be a bit more speculative or a little earlier in their gestation than we're accustomed to. But this tsunami may be finally coming to an end. I'm calling it a SPAC out. Like blackout, kind of blackout, great SPAC out.
That is so good.
Thank you. I was very proud of that. Yeah.
Wow, SPAC out.
Yeah, SPAC out.
Better than SPAC attack. So we're really
right. We may see 1 or 2 or 3. We may, but you're not going to see this avalanche any longer.
And the ones that are below 10,
for now,
don't you get $10? Don't you arbitrage that one?
You do. You can arb that. You can, because you either get $10 if you redeem, or if they don't do a deal, it's there. So right. It's time value money and those things. But yeah, they're trading $9.90. You can kind of try and lock in 9 cents.
Well, they've gone to $8 the last time that there was an overload, and so
but not ones. I don't believe ones that have yet to do their deal.
Right. And I want to point out, David, if you go over what he's saying, point blank, he is saying that there's just a lot of companies that are. I'm going to use the word worthless.
Yeah. Well, listen, we go through the presentations and we look at the projections. Many of them are based on 2025 or 26 revenues and or sometimes EBITDA, and the multiples are fairly high. Some are going to win, though. All you need is one big winner if you go, out of 10.
That's
if you get a 10-bagger. So who knows, Jim?
Maybe do what we call field bet when we go to play the ponies.
But this is starting to, at least, again, it's going to be with us for good. We're going to be talking about it, but this great moment we've gone through, or 291 or whatever that number was, 289 SPAC IPOs in, a little more than 2.5 months, that is going to slow down dramatically.
Yeah, I think that we're going to look at this day and go back and look at Sternlicht's interview and say it really was the SPAC out. Your SPAC out comment, his comments. They're beginning to see some secondaries. We also have some primaries. QuantumScape, which is the one that you isolated, they did a big deal last night.
Yep.
They got the money. And that means they could charge ahead.
And that's been a great one. And, at 57, that's still an incredible win. And for the sponsors there, oh my God, they're printing money. And let's not forget, that's behind all of this.
But you
money,
are so
money,
right.
money.
You are good. The SPAC app.
You like that?
No, I love it.
Shepard Smith here. Thanks for watching CNBC on YouTube.